Thank you very much. Good morning, everybody. First, I'll apologize for my voice. Been telling this great story for a little too long now around the world. Signal Gold is a company that's focused on a large gold deposit in Nova Scotia. We're quite advanced. We have about 195 million shares outstanding. Our current market cap is around $60 million. And we have about $16 million in the bank. We're developing a historic high-grade gold area called Goldboro in Nova Scotia. The picture on the top is the mine that was there mining one of the 67 veins that we've discovered back in the 1900s, and it built the town of Goldboro. We've been able to drill off the largest deposit in the province. It's now 3.1 million ounces of resource. And we've carried out a feasibility study that has proven, probable reserves of 1.1 million ounces of gold. This is the highest grade undeveloped open pit on the east coast of Canada. 15.8 million tons at 2.26 grams per ton in an open pit diluted grade delivered to the mill. At $1,600 gold, this has an NPV at a 5% discount of $328 million. At today's price of gold, including an underground scenario, in addition to the open pits, this is approaching $1 billion of NPV at a 5% discount. We have 100% ownership, no royalties, no streams, and a management team that has built mines in the past. This is a very industrial area, and there are no houses or infrastructure to move. The only infrastructure that you see within the outline of what the exhausted pits would look like is a drill in the bottom left and the old workings from the late 1800s, early 1900s. We bought this in 2017. It was looked at as an underground scenario when they had found 27 of these zones of argillites that averaged between 6 and 7 grams per ton. We drilled that for 3 years, looking at this as an underground opportunity. And when I joined the company in 2019, I saw that the halo and the dilution model for the underground mine was open pit grade. So we changed focus to the open pit scenario, doubled our resource in 2021, added to it again, and also did a feasibility study that came up with the reserves within the resources. So our feasibility study is worth $330 million NPV for just phase one, the open pits. When you look at phase two, which is the underground, which we will do a feasibility on in a few years from now, we cannot today because 30% of the ounces are still inferred, but that added another $330 million of NPV. So it looks as if grade increases at depth because the open pit grade is 2.8 and the underground grade is close to 6 grams. However, it's the difference in cutoff and the difference of how you mine. So the open pit would be taking large portions of low-grade ore that are the halos around these 67 zones, whereas if you went underground, you would not take those, and therefore you're mining just the high grade. The feasibility, which is currently being updated for current numbers, this is a year and a half old, so not that old at all, probably newer than most people's, but we owe it to ourselves and our stakeholders to come up with more current costs because of inflationary measures. But the open pit showed some very robust numbers. It's clean, 96% recovery, total all-in cost per ounce of $850. In other words, today there's a margin of $1,200 an ounce. We plan to do 100,000 ounces a year for 11 years just from the open pits. This is what it looks like for the infrastructure and facilities. It's 2 open pits split by a south end of a lake and a river. Waste dumps, a 4,000 ton per day CIP plant, a employee housing facility, and a large, fully lined geotextile tailings facility. This is what has been approved by the environment. So we have our environmental approval for this project in Nova Scotia, which is a key permit in moving it forward. The concession with the colors on the left map here is the concession we started with. We've since purchased 6 other concessions around us and increased our land position by 700%. And the large anomalies are west of the current 3 million ounces. Thank you. So you can see the shaded areas of the west pit and the east pit on the east part of this slide. That is 3 million ounces. Just west of that, in the same strike length, running through another past producer called Dolliver Mountain, is the geophysical signature and more mining of the same zones. You could fit another 3 million ounces in there, and that has not been drilled until we drilled it and announced our results 3 weeks ago. You can see the edge of the western pit, and then we move 300 meters to the west with the holes that are labeled in green here, and you can see the results. In some cases, hundreds of grams per ton over narrow widths, but generally the same, exactly the same type of intersections of multiple intersections that we get within our current reserve. This does continue to the west. The hot colors are the actual 67 of these argillite units that are stacked on top of each other. They're a folded anticline, and then the gray is the background, half gram to a gram. So the open pits, it's completely open to the west, it's completely open at depth, and we plan to continue adding to this current world-class deposit. This is from our PEA, because there's still some inferred resources underground, but we plan to develop the underground in year 6 of the open pit with cash flow, not a secondary financing, and come off with ramps within the pits so that we have, they're hidden visually, light, dust, noise is better, and we'll have opened the open pits for a few years and understood the project in 3D before we design an underground. A lot of people will design an underground based on drill holes this big. We want to open the entire open pit up for a few years first. So we've got our environmental assessment approval. We're working on our other permits. We've just hired 14 people out of 20 that we're building for our owners team. We've engaged a project finance advisor. We've signed over 25 confidentiality agreements with debt providers. We plan to be shovel ready in February of next year, so less than a year away. We want to be building this, and first gold pour would be a Christmas present in 2025 after the mine's built. So I would urge you to keep your eye on this. We have announced a financing yesterday of $7 million, of which $2 million of it will be flow through to keep the drilling to the west. We currently have $16 million. We have a further $5 million US to draw down on a bridge financing that we have. And we will be binding this. This will be the next gold mine in Nova Scotia, and it'll be quite high grade.
Okay, this was fast. Thank you very much.
Yes. Try and get you back on track.
I have questions.
Yes.
So, you said you will plan to build that mine on your own. You will need a partner or a good financing partner?
Yes.
What's your strategy?
So our strategy is to build this ourselves. We have a project advisor, a project finance advisor. So we plan to raise 2/3 debt, 1/3 equity, or equity-like, and build it ourselves, but through contract miners. We will not try and build our only asset ourselves and train people at the same time. So we'll get a proper contractor in. That'll cost more on the operating cost, but we'll leave ourselves open to go and operate it after a few years.
Okay, and you said you're so 2025, first pour and commissioning?
Yes.
Yeah. And you have enough people in the team who have built a mine. You have one, I saw that. Yeah.
We have people who have, I've been involved in 7 builds in my career.
Okay.
A little bit about myself, because I have time. I started as an underground miner.
Okay.
And then went into mine manager, superintendent, then into VP operations, and I've been running companies for about 20 years now as CEO. I moved to Kirkland Lake to reopen the Macassa mine, and we changed the name of the junior company called Fox Point to Kirkland Lake Gold. That became a multi-billion-dollar company that was purchased by Anglo.
Yeah.
I took IAM Gold public in 1995 with a team. I lived in West Africa. We built that into a multi-billion-dollar company. I permitted a mine in Nicaragua, which is now being mined. I worked for several years, from 87 to 92, for Breakwater Resources, when it was a real company way back then, building zinc mines. And then I started a company called Volta, which I took public and drilled off a 10 million ounce deposit in Burkina Faso, which is now being built by West African Resources. And then I joined this company, and I've been buying my position into it because I'm not a founder, so I've been buying alongside shareholders for the last 3 years.
So this looks like you have enough experience.
We do on the board, but we're hiring, we've hired a project director who has 14 people that have followed him that has built several projects, including all the work on the Jansen project for BHP. So a very, very seasoned team that builds mines.
Okay. You mentioned the financing. Which price?
The financing we announced 2 days ago is to raise $7 million at our 52-week low, basically 30 cents, with a 45-cent half warrant for 18 months.
Okay.
So a fantastic price.
Okay. Thank you very much.
Thank you.